Let's talk more about investing in tech and AI. Joining us for that is Jeff Yang, founding partner at Redpoint Ventures. Jeff, great to have you with us.
Hi, Melissa.
There's a lot of enthusiasm in the space, particularly on the hardware side, and I'm wondering, can we call that side of the AI picture a bubble, and where are we on the other side in terms of software?
Well, I mean, every decade or so, there's a platform that comes around that unlocks enormous value. And everyone builds on the last, and everyone historically has been bigger. And this one, I think, could be the biggest. So there's a lot of momentum behind it. You see it in the market today. In the private market, the AI companies are getting a substantial increase in valuation, maybe about 3x what other companies, and they're raising about 70% more capital. But they're also growing faster. By our numbers, these companies are growing about 2.5x faster, a little over 450% year over year versus about 200% for the other companies we look at. And so, this is a very large and vibrant opportunity.
We have already seen that the excitement around AI is fueling the market to new heights thanks to the Magnificent Seven. However, many investors understand that there are plenty of opportunities in the AI market outside the Magnificent Seven, which leads us to Palantir Technologies, a name that is definitely worth paying attention to in the artificial intelligence space. Palantir came to the scene in 2023 when it released its artificial intelligence platform, which became very popular when the company began hosting immersive seminars called boot camps as part of its marketing campaign. It's not just retail investors like you and me who understand that such AI opportunities exist outside the big players, but institutional investors too. In fact, DNB Asset Management recently cut positions in Apple, Tesla, and Microsoft, and more than doubled its stake in the data analytics firm Palantir in the first quarter. So why did they do that? And what are they seeing in Palantir to be so bullish? Let's find out. But before we do that, if you want to keep up with Palantir's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video. When you take a look at DNB's latest trades, you'd see that the firm sold around 668,000 Apple shares to end the first quarter with 3.6 million shares. They also sold 103,000 Tesla shares, ending the quarter with approximately 600,000 shares. The asset management firm also sold 750,000 Microsoft shares, cutting its stake to 3.5 million shares. On the other hand, DNB bought nearly 430,000 more Palantir shares to lift its stake to approximately 754,000 shares at the end of the first quarter. So, what's the case for buying Palantir? Let's get right into it. Hello everyone, and welcome back to Investocracy.
Do you think, if we are in a situation where companies start looking at their budgets carefully, and we could very well be in that situation at some point in time, is AI spending bulletproof effectively? Is this an area that companies have to spend on so that deployment will continue even if there are cutbacks elsewhere?
Well, nothing's bulletproof. Everything goes through phases and goes through highs and lows. But I really think this is something that is going to affect pretty much every company and how they think about their business and how they go about doing it. I think first you start with the models, and then you look at the infrastructure that helps implement these models. Then you look at the application that builds on top of these models. And then finally, companies that will benefit from the productivity gains or build new business models are all opportunities. I think people using enterprises and end users using AI it'll be foundational in everything they do. It's almost like the internet became foundational in how you think about business, or mobile became foundational. I think that's how it'll be with AI. And as I said earlier, every trend builds on the other one. So I think this one could be bigger.
Palantir's stock price has surged nearly 150% over the past year, showing that the company is capitalizing on the artificial intelligence hype in the market. And aside from DNB, more renowned analysts are turning bullish on Palantir stock. For example, we have CNBC's Mad Money host, Jim Cramer, who recently gave a thumbs up to Palantir, saying that investors should make a move and buy some. Moreover, one of Wall Street's most esteemed technology analysts, Dan Ives of Wedbush Securities, is calling for massive upside in the stock. He set a price target of $35 last month, nearly 70.9% above current trading levels. Analyst predictions aren't always accurate, but Ives' positive outlook hits the right note in my book. The combination of top-line growth and robust cash flow makes Palantir stick out among the competition because many high-growth software-as-a-service businesses are not yet consistently profitable. This was explicitly displayed in the company's Q4 2023 report, with the quarter being its fifth consecutive quarter of achieving GAAP profitability. This consistency in delivering profits is what makes Palantir well-positioned for the long term. Not only that, but Palantir's involvement with the government and the contracts it wins from it provides it with a crucial sense of stability as compared with its potentially more lucrative but less fixed commercial contracts. This was indeed the case with Palantir recently, as it received 3 new government contracts, including one that would allow 2 of the company's product offerings, Palantir's AI Mission Command capability and its Predictive Maintenance and Precision Sustainment Suite, to be available to support critical missions across the Department of Defense. Palantir bears have been issuing warnings about the stock left and right, claiming that the government business will slow down and Palantir will lose its strongest suit. And when you take a look at the company's financials, you might think that they're right, as government revenue was up by 11% in Q4 of 2023 compared to 23% for the same period in 2022. But what if I told you that it actually makes sense that the government side of Palantir's business is slowing down? Bays forget to mention that the government needs to approve the budgets for the Palantir contracts, which could take some time and slow down the flow of cash into the company. Still, that doesn't affect the expected revenue from the contract, but mainly when Palantir actually receives that money. Palantir's management recognizes this, which is why it's exerting serious efforts to grow the commercial side of its business. In fact, according to recent reports, Palantir has recently met with agencies to pitch inventory planning, programmatic sales, and campaign optimization use cases. The company believes that advertising agencies can use its artificial intelligence platform for a wide range of cases and applications, and this could be a huge deal for Palantir because it could allow them to reach more audiences and increase their customer base. And all of this will be through the industry's middlemen, media agencies, which are largely responsible for planning, organizing, and buying advertisements on behalf of major brands that Palantir could partner up with. It is worth noting that both the government and commercial licensing contracts for Palantir provide recurring revenue, which is always a big plus for investors in forecasting future growth. On top of that, with firms like DNB leaving some of the Magnificent Seven and purchasing more Palantir shares, it all adds up to the potential long-term success of Palantir. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Let's break down the road ahead. Wharton School Professor of Finance Jeremy Siegel joins us. Professor, do you think it's justified given what we've seen on rates, on geopolitics, headwinds piling up?
Well, Sarah, we know we had an incredible steady rise from last October, almost record-setting, not a 2% decline. And, you know, that actually is not healthy either because you get momentum players just jumping on the market. I think a little pullback. And by the way, I don't even think we have a 5%, which is the minimum definition of a pullback. But a little bit of softening is certainly not unhealthy for the market. I think we're going to get a good PCE deflator number next week. Yeah, which I think 2.7%. is will be the lowest in 3 years. And by the way, that's only 3/10 away from the year-end target that the Fed set in March of 2.4% for that deflator. So I think, yeah, we had three disappointments on CPI. I think PCE will come in, and I think our CPIs are going to start coming in May and June. So, and when we take a look at the futures, we've squeezed down to basically one cut
Yes.
by December. I actually think that we could get more if we get these good deflator numbers and inflation numbers. So I think, you know, I still see gains in the market going forward this summer.
Let's move on to a company that's about as far from Ford as you can get. That would be Palantir, partnership announcement with Oracle.
Yes.
And so some things happening there. What do you think?
Yeah, I think this is really big. I mean, you know, Palantir obviously is the leader in this deep data analysis space, and the combination of them plus Oracle's infrastructure in the cloud should be a very, very indomitable combination. That means they're going to get more customers from governments, more customers from large corporations. The stock is by no means cheap. It's trading 70 times forward PE, but their growth is 70% year on year. And as long as that growth rate continues, I think it's just in a hyper growth stage at this point. So the stock was good, $3.5 billion of cash on the books, no debt. So, you know, it could be a bumpy ride, but it definitely looks like it's set for the stratosphere at this point.
Palantir's Q1 earnings report is just around the corner on the 6th of May, and the company's management anticipates revenue in the range of $612 million to $616 million, which should be around $322 million in government revenue and $292 million in commercial revenue. If we compare this year's Q1 expectations and the 2023 Q1 report, in which Palantir generated revenue of $337 million, split into $107 million in commercial revenue and $230 million in government revenue, we'll see that the company is expecting its revenue to almost double year over year, which is certainly a bullish sign. Meanwhile, the full 2024 fiscal year revenue is expected to be $2.6 billion, with an adjusted operating income projected at the range of $834 to $850 million for the year and adjusted free cash flow in the range of $800 million to $1 billion. If Palantir's Q1 report for this year manages to achieve the estimated revenue or even exceed it, it could play a crucial role in the stock's performance with a certain boost to occur. Not only that, but it could also lead to another great catalyst for Palantir, which could happen this June. Let's find out what that is.
NVIDIA seems to get all of the attention here, but when you're looking at what these other stocks are doing and these AI helper companies, give me a sense of the movement that we're seeing.
Hey, good morning, Contessa. Yeah, I mean, there's a few, stocks have exploded in market capitalization on the base of this, AI adoption and this new evolution we're in. A few companies, if you're looking for some possible beneficiaries behind SMCI that may be looking at the S&P, there's two names that we might consider that are meeting the market capitalization: Palantir and Manhattan Associates. I think those are companies that we may want to look for. Manhattan being an application software company. I hold the stock, global leader in supply chains and inventory logistics. And then Palantir, we know that's an AI play. So those are two names to keep an eye on.
With the S&P 500 rebalancing happening in June, what are the chances that Palantir could join? Does it currently meet the requirements? As we all know, the S&P 500 is an index of the 500 biggest companies in the country, and it's generally considered to be a reference point for the overall health of the market. So, getting into the S&P 500 is a big milestone for businesses, and if Palantir manages to get in this June, the stock would definitely receive a boost. However, meeting the criteria to be added to the index is no walk in the park, and Palantir has struggled to get in before thanks to the fact that it wasn't profitable. That being said, Palantir has been eligible for the S&P 500 inclusion for quite some time now, thanks to its consistent revenues, and it's guaranteed that induction into the S&P 500 index will put Palantir on the radar of more institutional investors. As a result, the company's coverage from investment banks and interest from hedge funds should begin to increase, which will definitely be a positive thing for the stock. This could pretty much be the catalyst that would boost the company's Q2 results, and if the company achieves profitability in Q1, then its chances of getting into the S&P 500 will increase because selectors want to be sure that one profitable quarter isn't an anomaly. So, there's a lot coming up for Palantir, from new government and commercial contracts to a possible induction into the S&P 500. With its stock trading at $20, down by around 3% as of the time of this video, it looks like now might be a good time to buy Palantir stock in anticipation of the upcoming catalysts in May and June. But what do you think about Palantir stock? Will you be buying before earnings? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Palantir is. If you would like to know more about the latest updates about companies like Palantir Technologies, then go ahead and click on the next video on your screen. See you there.